Well, Mike, the yield curve is uninverting. The stock market's down 6% from its highs. Amazon's down 11%.
Yeah.
It's never a dull moment in markets. I thought the summer would just be like, okay, coast through August. Turns out no.
Yep. Yeah. It was an interesting conversation with sort of a beginner trader that I spoke with last night about. Well, I don't understand how come Amazon beat on earnings but still went down 11%. I said this is the beauty of markets. It's not about what we think is going to happen. It's our reaction to what happens that moves markets. And in this case, Amazon missed on revenue, and that seems to be a pretty big downside for the company, unfortunately.
Oh my god! Every time I see stuff like that, like what I want to do is just run to Reddit, see the people who made a bundle on the puts, who lost the shirts on the calls, just enjoy, just soak it in because it's so. I find it very uplifting to find people who go, I had a thesis and I thought this would work out well, and I invested this amount, and now I'm like set
Mhm.
for the next few years for my family. I go, okay, that was really worth it.
Yeah, good for
All
them.
right. Well, for this week, for office hours or traders posts, always happy to answer questions. There was a little glitch with, I think, with Trade8 on the Trade8 side, where there were a bunch of support tickets where that was an issue. Luckily, it wasn't like the CrowdStrike problem, but just
Mhm.
to bring it up as one of those things, you also want to be paying attention to your strategies, even if you have them running for a long period of time, because you just never know at what point in the workflow there might be a little hiccup, and that's just one of the things you have to deal with as an automated trader.
Yeah, we are in touch with Trade8's team, and we're working with them actively to try to figure out why there have been a number of connection issues and 500 errors coming back from their APIs. But at the moment, we're just kind of working through the issue with their team. We don't have an update just yet, but we're keeping an eye on it and seeing how many more errors start to come through, or if it seems like the issues have been ameliorated.
Sure. All right, so we had a question this week from Ali Greasy, and they were asking what happens when an exit order gets rejected. Is another order sent to complete the exit?
No, not automatically on TradersPost side. Assuming that you have um, maybe a an additional signal that you send on your Pine script strategy, TradersPost won't follow up unless you send that signal. So it's another, to Tom's point earlier, it's another thing you have to keep an eye on. If your order is rejected for any particular reason that you weren't expecting, that's a very good reason to be looking at your account to make sure that you understand why it was rejected, and either go back and resubmit another order or exit the position manually if there was a mistake of some kind. But if the order was rejected for a specific reason and you were expecting that, then we are going to assume that you're going to send a follow-up signal of some kind.
This is why it's so important to do the forward testing versus the back testing, right? In back testing, you're never going to get this issue of the order not being filled, or depending on how you do your back testing. But in
Mhm.
forward testing, then you get to see some of these issues. I know for Pine script development, sometimes depending on the strategy, it makes a lot of sense just to send safety orders in, safety cancellations, safety exits, just to make sure at the end of the day, make sure that an order goes out to close all the positions that were there, because
Right.
you just never know.
You never know. And that's a very good point to bring up too. That's kind of the beauty of sending action equals exit. If there isn't an open position, we're not going to, incidentally put you 5 shares short or something like that. An exit signal is an exit signal. So what we're going to do is look up your actual position, whether you're long or short, and flatten that position if it exists. So if you send action equals exit and there is no position, there's no harm done. It's just going to be an order that's rejected by TradersPost.
All right, next up here. This is something I don't generally encounter because I don't trade futures. Um, but someone was asking, how can I overcome the large bid-ask spread for futures, like in natural gas, when using Traders Post for automated short-term trades? I think
Yeah.
this person is trading, 30-minute time frames. What can you just describe what this problem is and how it can be mitigated?
Sure. So we're really referring to the lowest price that somebody has bid and the highest price that somebody's asking, and that difference between the two. And in some markets, like natural gas, sometimes those spreads can be fairly wide. The difference between those two prices is enough to where it's costly to actually enter the position because you're going to end up buying at a higher price than you end up expecting. You'd like to be close to where the last match price is, but ultimately you end up somewhere a bit higher if there's a large enough spread. There really isn't a way to circumvent that if you're executing market orders. Whatever when you submit a market order, you're going to get what the market has available for you at that time. And that can mean that you're paying the cost of entering into that position through the bid ask spread in addition to whatever the commission was to enter. So, in general, we would refer to that as slippage. And that slippage should be accounted in your back test and in your performance to make sure that you're accounting for things like large spreads in certain types of contracts and markets. So the only other way around this problem is with limit orders. If you choose a limit order and you want your entry price to be very specific, you can avoid a bit of that bid ask spread slippage by asking for that specific price. The problem, of course, you run into at that point is you may not actually get a complete entry or an entry at all. Maybe only one contract gets filled of the five you asked for, or maybe none of the contracts are filled. And so you're left hanging there in an opportunity to take a trade that you could have entered if you had entered at market. So it's really a trade-off, and you're going to have to make a choice as a trader as to how you want to enter and exit your positions, assuming that you've traded on a little bit longer of a time frame and you are trading a number of ticks so that you have enough room for that trade to breathe, if you will. Then maybe slippage isn't such a big deal. Entering in at market is okay, and you can afford to take the cost of entering the market, which includes commissions and slippage.
Question. I mean, this is just occurring to me now. I've never actually done it, but I know you can't set on the same strategy and the same subscription multiple limit orders, right? Because one will cancel the other, or one would need to be canceled for the next one to work. If you had multiple subscriptions to the same brokerage account, could you then have multiple different limit orders active at the same time?
Well, the subscriptions don't really conflict, or they're not the actual reason that you can't submit certain types of bracket orders with the brokers. You can certainly have more than one limit order. Of course, you could have one limit order at 100 and another limit order at 95, all within the same subscription. And the
I see.
same is true for the other side of your trade. You could have two exits at multiple prices. There's nothing inherently that would prohibit you from doing that other than how you construct your alerts and how those orders are set up with the broker. But in certain conditions with certain brokers, there are types of OCO orders or that aren't supported, and so you may run into issues with that.
Right. Okay. Yeah, that's what I was thinking. Like send multiple limit orders, but then they would all get filled if the price really moved across them all. So that'd be a
Right.
problem. You would want one to cancel all the other ones.
Yeah. So like I have a strategy that's mean reverting, and it takes 8 positions to the entry because I'm actually expecting price to keep coming down. I want it to. In fact, if it fills my lower and lower orders, that's actually better for me.
Hmm.
So as the price comes down, I have these 8 limit orders that are all set, and they're at varying prices that are calculated on the way down, pre-calculated on the way down. And if the first two get submitted, but then price starts to mean revert, then I'm going to cancel those other limit orders, and then I'll just exit whatever position I've been able to establish at that point. But that requires all that logic is written on my side. That's not something that TradersPost handles automatically. I have
Fair
to
enough.
put that thinking in place ahead of time.
Perfect. We have a question in the chat here from John King. This is a topic that came up a couple of weeks ago, so we'll
Yeah.
just touch on it again. John asks, is there a chance that you can just allow exits during outside trading window? This would be awesome, so we don't have to set an alarm to close a trade.
Yeah, you bet. I'm going to +1 that feature request. We've had, I think, 2 or 3 instances of that request before. And it is a fair call. Many people are very comfortable with entering or only want to enter within their trading window. But then if something happens in the overnight session, they want the ability to get out. And I think that this is a fair feature to ask for. So we can certainly see where that prioritizes against the list that we're already tackling.
Excellent. Thanks for that, John. All right. This is a small question, but I thought we'd just bring it up. And that is about the JSON message that's sent to
Yeah,
TradersPost. And they were asking if the properties were case sensitive.
right.
Um, and they are. They are case sensitive. But that's because JSON is the that format is case sensitive. Um, is there any thought here about making it insensitive, and does that open up some issues?
Yeah, so this is kind of a nuanced question. I'll try to unpack this, delicately without getting too nerdy on the subject. But the JSON payload itself is just text. So in theory, you can actually make it all lowercase or camel case. In the case of one of our properties called limit price, it's a capital P and not a lowercase p. If you look at our documentation, we have all of our different properties for how the JSON payload should be constructed, the way the messages should be constructed. And the reason that it's currently case sensitive is because that's how we interpret those properties when we read the JSON message at TradersPost. But we had this issue crop up recently where there are sort of two nuanced issues here. One is that we don't have market data from Trade8, and limit price requires that capital P currently. So a user sent in a request to exit a position with a limit price, but they put limit price as lowercase p. And normally, under those circumstances, if we can get a market price and you didn't provide a limit price to us, which in this case we don't think you did because it's lowercase p, then we ask for the market price and we set your limit order at the current market price. But in the case of Trade8, we don't have a current market price because they don't offer market data. So we actually exited the position at market. Well, our customer was, rightfully a little confused. I sent in a limit order. Why didn't this get filled as limit? Instead, it got filled as market. And that's because of that little tiny difference in the case sensitivity for that property limit price. So John and I talked it over, and we're going to implement case insensitivity for those properties in the coming weeks, so that if you do send over limit price all lowercase, we're going to interpret that property and make sure that it's executed properly, so that little mistakes like that don't end up in the wrong kind of order. But at the moment, the JSON properties are case sensitive. You should probably copy the property names from our documentation if you want to be on the safe side. That way there's not, a spelling error or a case sensitivity issue like that. If you just copy the property name and then paste it in your message, it's probably better off.
The times as a coder where I've wanted to throw my computer out the window the most is when there's an error like this. There's a space before a colon. You forget a semicolon. You have a
Yep.
capital letter when it's supposed to be a lowercase letter, and you go. Generally speaking, the programming language doesn't necessarily tell you, "Hey, there's a problem. This is the specific problem,"
Mm-hmm.
and you're just hunting, and you're hunting with a fine tooth comb, and you're just
Oh
like,
yeah.
"This is the. Why wasn't I a singer? Why wasn't I a swimmer? Why am I doing this?"
Why am I doing this? It's
Yeah.
torture. I totally feel that, especially with semicolons in JavaScript based languages,
Yeah.
JavaScript or Node.js, that will not throw an interpreter error or a syntax error. It'll actually pass because you don't always have to put a semicolon in. But in certain cases, that is the exact reason why the code didn't operate the way that you expected. So it's a tough one sometimes.
I get in Visual Studio Code. I'm always hearing the dun dun noise sound that there's an error in my code somewhere, and it's so nebulous. It just tells me that I'm doing poorly, but doesn't tell me anything specific. It just makes me feel bad for every keystroke. Oh my god.
Mm-hmm.
I should have that as my alarm clock. I'll definitely wake up in the morning with the right amount of
That'll get you up or
adrenaline.
make you want to go back to bed all day long and never get out.
All right. So next up here, we have a question that came in. So someone's saying that they have a strategy that includes a take profit and stop loss bracket, but it only submits the entry position to the broker and not the exit position. And they were wondering why would that be? Um,
Sure. Yeah, I think in a couple of cases, there might be a broker that doesn't support bracket orders, in which case, the trade is ultimately just going to be rejected. You shouldn't take the entry order in those cases because that's not an order type that's supported. But I believe in this case, the user had sent in the stop loss and take profit parameters in their JSON payload, but in their strategy settings had not ticked the box to use the signal as the take profit. Instead, that it was based off of the strategy settings. And in the nuanced world of how TradersPost works, it's sort of a cascading list of of checks. If you have properties that you sent in the JSON payload, you have to tell your strategy settings to listen to those properties. If you don't hit that switch to say use the signal settings, then it will use the settings in your strategy. So everything kind of waterfalls down in terms of how the rules work. And then if you don't have any strategy settings, there are defaults that TradersPost defaults to. And so those three different layers of rules have to be understood. In this case, the user just needed to flip on that switch to listen to the JSON payload, and that would have set the take profit and stop loss order properly.
It's so interesting to have. Sometimes I'll see the discussions within the Discord group where someone goes, "Well, this feature should work this way because it would work better for them," and someone else goes, "Well, no, this is exactly the way I would want it to work because what if I just like in this scenario, what if you didn't want to have to go and change your JSON payload all the time? You just wanted to be able to toggle it in the TradersPost setting." They go, "Well, that's far more convenient to me."
Right.
And so I can understand how there can be some back and forth, but it's really great to see within the chat there where other people will just jump in and answer the question and solve the problem before Cam can actually get to it. It's really a sign of a nice, vibrant community.
That's what I love about our Discord community, no question.
Yeah, and I think you and I will try to be more on Reddit because I'm seeing more and more talk about automated strategies on Reddit, and I think having the conversation in both places will really be useful, especially since I want people when they search in on Perplexity or different types of AI search engines, the new ChatGPT one to come up. I want that TradersPost content to be in there. I want you to be able to answer your question no matter where you are. Documentation, Discord server, support, chat, online. We got to be everywhere.
That's right.
All
Need good training data for the AI models.
Right. So this is a broader last question I wanted to ask. This really actually had me a little bit pensive for a little while, and this was someone on Reddit who was asking, "What are considered acceptable returns for an automated strategy?" And you know me, I'm insane when it comes to the returns I'm expecting for trades. But I was like, okay, what would be enough? So how do you think about it? Like, are you factoring in the number of trades you're taking and the inflation rate that you need to go over, the commissions that you need to be able to pay? Are you factoring all that in, or are you just focused on getting a strategy that actually generates some sort of positive return and then refine it with the expectation that it becomes profitable and compounds returns over time?
I think the last thing you said there is about as close as you can get to really, attempting to beat the market. But one of the benchmarks that I think you should start from is knowing what returns the market even offers, and that understanding, I think, leads you to understanding how difficult it is to exceed that. You should start from the premise that in many cases, I mean, many cases, particularly momentum and mean reverting strategies that trade intraday, they tend to underperform the benchmark. They might do very well. They might have good, metrics from a profit factor and win rate perspective. Like I win 90% of the time, and my profit factor is 2.5. Okay, great. But you're only taking out very tiny slices of the market returns if you're only trading intraday and you're trading in short periods of time. And you might make the argument that, well, I win so frequently and I'm trading with size and leverage that I'm able to exceed the returns if I was just buying and holding. Okay, that's totally possible. And then I hear the Reddit crowd and Twitter already responding with the most common phrase in financial markets: it works until it doesn't, right? And that is true for many strategies. There are regime changes. Oftentimes it's difficult to get a strategy to hold up over time. You get this like awesome win streak, and then all of a sudden it just starts to fall apart and you keep searching for the holy grail after that. So I think when it comes to acceptable returns, ultimately we want to start from that benchmark. I get pretty skeptical if people are posting anything above a 20% CAGR, or compound annual growth rate. It is extremely difficult to do this consistently for many, many, many years. So ultimately, many of the strategies that I have are attempting to at least match market returns after commissions and slippage and taxes. And if it can't really do that, I don't think it's a great strategy. So then you're kind of left with this next bucket of possibilities, which is that if I have a decent strategy that trades intraday, or maybe it trades over a couple of day period, or it's a swing trade, I might be exposing myself to either additional risk or using leverage in order to exceed those market returns. So it's a really tough answer. Like I feel like there's a master class here of like how to think about risk and reward and risk and returns in markets. And it's not a very simple answer to ask to say what is an acceptable return. It largely has to do with your appetite for risk, your access to leverage and margin, the amount of capital you're working with, and how you're currently trading markets. But also, the criteria by which you decide your strategy needs to perform is also a rule you would need to follow. For me personally, this is not worth doing unless I can beat the market returns.
Interesting. I have like this dual view of it where, and it's what led to me really swinging big whenever I'm swinging in the markets. And I know I'm very facetious about it, but I actually do take care to trade properly.
I know you do.
Um,
We should
but
make that
the
clear, because we talk a lot about like, oh, how Tom was all insane with his trade. No, no, no.
right.
Tom's actually really smart.
So for me it's sort of like learning how to code or doing some other job. For me, the developing a strategy, understanding what rules I'm following, and the asset I'm trading, to me, it's all exercise of learning. I'm gaining more information about how gold reacts and how it reacts to different monetary and fiscal frameworks, how it reacts just naturally through the ebb and flow of the different market participants, how it's different than how oil reacts, how it's different than how the dollar reacts, how they correlate together. And there's every time I try a new strategy, I gain more and more and more and more knowledge. And then what happens is that for a period of time, it's almost like a limitless type situation where I get to see, hey, wait a minute, there's this pattern that's been going on for the last 3 cycles. Uh, I have an expectation here that now gold will be in this channel, and that if and the options are, the implied volatility for the options are priced low. If I actually play the next 3 bounces on this, I have a high likelihood that those options will pay off pretty significantly, and then I'll put in a strategy, and then just run it for that period of time because I've spent a year looking at it and realizing, hey, there's like a window of opportunity. Sort of like playing the old video games where you have to get across something, and this piston's going up and down, and you spend your time looking at it, and you go, wait, oh, it's 3-2-2, 3-2-1. Okay, now I can go through and make it to the end, and then get the big payout. And so for me, the idea that, or like when you're learning any skill with programming, I mean, how many jobs did I do where I made like no profit? It was just learning how to deal with customers, learning how to answer these questions, learning what have you. And then
Sure.
you wake up one day and you're like, hey, wait, now I'm making a living off of this.
Yeah.
And so that's very much how I see it, that the market, the big benefit is that you get this, for me, this knowledge of how these different things interact. And then when the opportunity arises, you have the knowledge to take advantage of it.
Yeah, I totally agree with that viewpoint. I think that's fair to say that maybe another way to say that is that you're paying tuition to the markets, right?
There
So,
you
like,
go.
maybe you underperform slightly, but it's because ultimately you're taking this time to actively invest and actively understand how markets work. And I think that's a fantastic investment in your time, and the education you're going to get from that is enormous. We've talked about this before, where I honestly think that being a trader and investor, I've learned more about myself than any other endeavor I've ever pursued. Even as an engineer, like being an engineer taught me how to think about logic, how to think about syntactical structure, and rules, and how the machines, how CPUs work, how RAM works. Like there's a ton that I've learned in that domain, but it's not taught me a really good depth of me and my own ticks, my own weaknesses and strengths. Like I've developed a strength to understand things logically and analytically, but trading and investing, man, I've learned all my weaknesses, all my strengths, all the things that I need to improve on. So it's a fantastic endeavor from that perspective. The psychology around all of this is amazing. But beyond that, it's an endless journey to understand the math behind markets, the participants, the different ways in which you can express a trade, the different types of asset classes there are. I mean, you're never going to be tired for learning something new, and there's plenty of dry material out there to read.
I'll tell you, it's given me a renowned appreciation for. I used to think that people in finance and in Wall Street were the bad guys. And now I'm realizing, no, they're not the bad guys. They're just pirates on the water, and there's things to be learned and things to be gained from learning what they're doing.
Yeah.
All right. Well,
Peter says, sounds like you're describing marriage.
that's exactly right.
That's pretty good. That's really good. Yeah, I've learned more about myself through my marriage than trading. Actually, I should
That's right.
rephrase that before my wife reads this or watches this episode.
Excellent. All right, so we'll leave it there for this week for those questions. As always, we'll take a look on Discord, on Reddit now, on support tickets to see what questions people have for next week. And let's jump into after hours.
Sounds good. Thanks, everyone.